There will be no quick video editing or flashy edits here, only useful practical information. And remember, the last point that we will consider is the most important. Enjoy the video. If you want to understand what is moving the Dow Jones today, stay with this video until the end, because the last part will help you separate real market drivers from short-term noise. The Dow Jones is one of the most closely watched stock market indexes in the United States, and when it moves, a lot of investors immediately want to know why. Sometimes the answer is obvious, but other times the market moves for several reasons at once. That is why looking only at the headline number is not enough. You need to understand the forces behind the move if you want to make sense of the bigger picture. The Dow Jones is made up of large, established companies, so it often reacts to changes in the economy, interest rates, corporate earnings, and investor sentiment. If investors feel optimistic, the Dow may rise as they buy into companies they believe can keep growing. If investors feel worried, the Dow may fall as they move money towards safer assets or simply wait for more clarity. One of the biggest things moving the Dow today is often interest rate expectations. When investors think rates may go lower, stocks can become more attractive because borrowing gets easier and future profits look more valuable. When investors think rates may stay high, the market can get nervous because higher borrowing costs can pressure companies and consumers. That is why every update from the Federal Reserve gets so much attention. Even a few words from policymakers can change the mood across the market. Another major factor is corporate earnings. If big Dow companies report stronger than expected results, that can push the index higher because it signals that businesses are still performing well. If earnings disappoint, investors may worry that growth is slowing or that profit margins are under pressure. Earnings season often creates some of the biggest daily swings in the Dow because it gives the market fresh information. The next thing to watch is inflation. Inflation affects everything from consumer spending to company costs, so traders pay close attention to every new report. If inflation is cooling, the market may see that as a positive sign for future rate cuts or better economic stability. If inflation remains sticky, investors may worry that the fight is not over yet. That can create a more cautious tone in the market. Labor market data also matters. Strong job numbers can be a good sign for the economy, but if they are too strong, investors may worry that rates will stay higher for longer. Weak job numbers can raise concerns about a slowdown or recession. So even good news can sometimes be treated as bad news, depending on what investors think it means for policy. On top of all that, sector performance plays a big role in the Dow's daily move. Because the Dow is price-weighted and includes major industrial, financial, healthcare, and consumer companies, a few large names can have an outsized impact. If heavyweight stocks like banks, industrials, or major consumer brands rally, they can lift the whole index. If a few of those big names fall hard, the Dow may struggle even if the rest of the market looks stable. Geopolitical headlines can also move the market quickly. News about trade, war, elections, or global supply chains can change investor expectations in a hurry. Markets hate uncertainty, so when headlines create fear, the Dow often reacts fast. That reaction is not always rational in the short term, but it is very real. The key thing to remember is that daily market moves are often a mix of fundamentals and emotion. Some days, the Dow is moving because of real economic data. Other days, it is moving because traders are reacting to headlines, rumors, or technical levels on the chart. That is why one day can feel completely different from the next. If you are watching the Dow today, do not ask only whether it is up or down. Ask what is driving investor expectations, whether it is rates, earnings, inflation, jobs, or global events. That will give you a much better understanding of the move. And if you watched until the end, you now know that the Dow is not just a number on a screen. It is a snapshot of how investors feel about the economy, company profits, and the future all at the same time.